Okay. So correct, when we're talking about financial accounting, which is what we focused on in college accounting procedures and financial, we're talking about preparing financial statements for outside users. It must be GAAP compliant. You know, we prepare them usually like monthly, and then yearly we have to prepare like our big annual report. If we're publicly traded, it has to be, you know, published out for our stakeholders and everyone, okay? And of course, you know, as a company, we also review our financial statements, obviously. But for managerial accounting, our users are internal and mainly managers, right? Managerial accounting kind of makes sense. So again, we're using reports that we're running. They don't have to be GAAP compliant. That's a big kind of new thing. So the reports that we do in here don't have to be GAAP compliant. We're not preparing them for outside auditing or, you know, the IRS or stakeholders. So they can totally be whatever we want them to be. They can be proprietary information that we're not sharing with outside users. It could be something very basic and simple. So there's no real, you know, there is structure to a lot of the reports we do, obviously, but they don't have to be GAAP compliant. So we can prepare them whenever we need them. You know, most companies use a computerized database system where they can easily run a report, you know, saying what happened yesterday or the last month or the whole year, whatever we need to do, okay? So really just as needed. So they're for the whole company. They could be for just one department or just one product line. It just depends on the needs. So managerial reports are really ran for necessity for everyday operations, okay? So that's kind of your big takeaway there. And we talked about that. We talked about all of that, so we're good there. See, I get ahead of myself, right? So managerial accounting, you know, we're really looking at, well, who needs the information? So we usually look at some type of organizational chart. You know, the CEO of the company is probably not going to need to see HR reports on, you know, time and things like that on a daily basis. So again, these reports aren't really for upper level. They're usually for the management level that is working directly with, you know, production, or it could be the manager of HR. You know, you're looking at departmental managers that are using this information. So these reports could be very specific to the department or to the product line, okay? So again, you know, you have all these vice presidents and chief financial officer. And they may look at reports. There'll be some reports that apply to them, but they're going to look at overall reports over their whole division. Whereas, you know, the vice president of human resources or human resources manager is going to look at just what that person is in charge of. So again, it's managerial accounting. We're just focusing on statements that are specific to each level and what applies to them, okay? That's the big takeaway. Most people call the managerial accountant the controller, so you've probably heard of that term before. So a company's controller is a managerial accountant. So again, they're going to be doing a lot of budgeting and analysis, running reports for different departments, setting up those reports. They may do the taxes, they'll do the cost accounting if necessary. So that's kind of who's in charge, okay? And again, we'll cover this stuff kind of very basically and broadly. You've already been kind of exposed to it. But, you know, in the adaptive learning plan, you learned the 5 kind of processes of management or phases. They're all intertwined though, right? I mean, we don't ever get done with planning or directing, controlling, improving, or decision making. So all of these processes all are a continual thing, okay? Never are we finished unless we, you know, close up shop. So, you know, it's all part of managerial accounting, is a part of each of these steps. So when we're planning, that's going to be based on budgeting information. So we're looking at historical data, things of that nature, trying to plan for the future, okay? We're making goals, right? Both short and long-term goals in that planning phase. So that happens usually at the higher level, you know, are the ones planning, the CEO and all the vice presidents, president, are making those strategic plans with, you know, every vice president that's ahead of every department. Those plans get put into place and the managers try to implement those, how they apply to each of their departments. So decision-making happens at every level, right? Because you have to have decision-making to make a plan and to implement it. So that kind of, as you can see, is in every part of the process. And then the controlling part, well, a lot of that comes from the controller, right? Like they're the ones that are giving the feedback. But the managers are part of that too, because the cost accountant can give you all the data and tell you what is happening, but the managers have to make decisions and put it into play. And then there's always improvement. So, you know, it's just a continual flow chart, you know, that we're always in this process, okay? So the cost accountant or controller is a part of this entire process. They're not making decisions, but they're providing the data for others to make decisions. And they're usually going to give their, I mean, they may give their opinion on things, but the managers are the ones at upper level making the decisions. Okay, so as we get further along in the semester, we will actually look at strategic, you know, planning and budgeting and everything like that. But, you know, we're not diving right into that just yet. But a lot of what we do in cost accounting is based on, you know, the budget, what we budgeted for the year, and then seeing if we're meeting those goals. Okay. So we're doing both operational planning, which is your short term, and then strategic, which is long term. Like, do we want a new factory or a new product line or something like that? So again, we'll just kind of roll through most of this. But the big thing is this is a continuous process once again. So we're always planning, we're always improving, we're always making decisions. Okay. So this just kind of goes over the uses of managerial accounting. Again, we've kind of talked about that already. This is just giving us specific examples of what you'll see, okay? So managerial accounting provides the cost of manufacturing a product. Well, if you stayed and watched any bit of that profit that we were looking at on Tuesday, or just in general, we have to know how much it costs to make something before we can set a selling price, right? Makes sense. It seems common sense, but some people don't get that. So it doesn't matter what industry we're in. We have to know what our product costs are in order to set a selling price, because we need to make money, right? A profit. So that's step one. That's a big point of cost accounting. And it's not just about setting that selling price, but it's also maintaining and figuring out if that cost is a good cost, right? Like, is our product cost too high? You know, maybe we can find a different supplier or use a different material. So that's all part of it too, okay? So there's a lot of decision making that goes into that. So again, we might use a managerial accounting data to monitor and control costs. So if our labor cost goes up, well, we want to know why. So we'll run reports and figure out, do we have unskilled workers? Are they lazy? Are they making mistakes? You know, why is our labor, or do we have highly skilled laborers and we've increased their pay, so our labor cost has gone up? There could be different reasons that are affecting it. And so that we don't see in financial data. So we run specialized reports to look at, well, why is our labor cost so high? And we talk with, like, the production manager. You know, that makes sense, right? Why is your labor cost high? So we'll look at things like that. We'll look at, do we have a large amount of scrap materials or too much employee downtime? Are employees playing on their phones instead of, you know, manning the factory? You know, that's a problem. So you can see why all of this takes a lot of interdepartmental communication. The controller is going to run the report, but then they have to go and actually talk to the managers to get the full picture, or even maybe workers, and find out what's really going on here, okay? So there's a lot of analyzing. It's not just data-driven. It's people-driven too. Okay, so we could look at potential efficiencies or dollar savings if we upgrade equipment. You know, it could be computer equipment or factory equipment, or is it too expensive? Is it not worth our money? Okay, we could do a report that analyzes how many units need to be sold to cover operating costs and expenses. So that's like a break even, which we'll do in here. So we can set, you know, targets. We can set, okay, if you make this many, if you do this and sell this many items, you get bonus. There's all kinds of things that we use managerial data for, okay? So again, we'll focus mainly on manufacturing processes, you know, in this class, but these same concepts can be applied to merchandising and service. They may just be a little more simplified because they may have like one inventory, or in service they have no inventory because they're not selling things. But the same concepts apply, okay? We're just focusing on manufacturing because it's a little more detailed. There's more work involved. So we're going to look at, let me move this down here. We're going to look at, in this chapter, guitar making. Yay, right? So, you know, they're a manufacturing company. So the customer places an order. We have to gather materials to make the guitar, makes sense, raw materials. So we purchase wood and guitar strings and whatever else, the little pieces we need. And then we have some different departments. We have somebody that's cutting all the wood and somebody that's assembling, and then we have a finished guitar. So, you know, that's just kind of showing you visually one example of a manufacturing process. Some products don't have that many different assembly parts. You know, others, of course, are much more detailed. If you're making a car, there's a lot more processes and parts, right? So, you know, it depends on the industry and the product, but that's the basic kind of flow of what we're looking at. So now we'll get into all the good terminology. So that's when your notes kind of come into play and everything too. So we're looking at kind of, instead of calling things expenses when we're talking manufacturing, we're going to call them costs. Okay, it's really just another term. We're still going to have like selling and administrative expenses every day, but when we're talking about the product, anything related to the product itself, we're going to refer to it as a cost. Okay, so it just depends on what's driving the cost. You know, we have what we call a cost object. So if it's a product, the cost object is the product, and any costs associated with that would be product costs, materials, labor, that sort of thing, okay? Or it could be associated with a department or an activity. You know, your cost object can be different. The cost object is just anything that's driving costs, that's incurring costs. Costs can be direct or indirect. It does get a little tricky sometimes to determine whether a cost is direct or indirect. You know, sometimes takes a little bit of, you know, pausing and thinking. But direct costs are really costs that we can directly, that's a word, right? Directly trace to a product or to a cost object. So when we're talking about direct costs, like for a guitar, we're talking about the wood. We know how much wood it would take to make one guitar, so we can trace the cost, you know, of the wood to the guitar. Okay, so that's like a direct materials cost. We probably can calculate how much labor it takes to make that guitar, so that's a direct labor cost. Okay, indirect costs, you may be able to say, oh, well, it's working towards making that guitar, but it may be working towards something else too. We really don't know how much cost it takes for that, just the guitar. So, for example, an indirect cost could be salaries of production supervisors. Okay, so we can't determine how much that production supervisor's salary is going towards each guitar. Okay, so it's a product cost, right? Like, you know, but it's an indirect cost. So we have people that are supervising the people making the guitar. So the person making the guitar is a direct cost, because we can figure out it takes an hour to make a guitar or cut a guitar. But their supervisor, they're supervising cutting, assembly, they may be supervising other areas. We can't trace that supervisor's cost down to each guitar. Yes.
So is it more like the hands-on is the direct cost
Yes.
versus the often or the
Yes.
supervisor?
Yeah, you can absolutely look at it that way. Because we're looking at, can we trace a cost to one guitar? When you're looking at a direct cost, if you can calculate the cost for one guitar, then it's a direct cost. Most of your direct costs for products are materials and labor. Okay, those are your direct product costs, materials and labor. But it has to be like labor working on the actual guitar. Okay. So indirect costs are really just anything that we can't determine how much it costs per guitar, okay, or per item. So it does get a little bit confusing. They're both product costs though. They both are going, we need to apply, here's where it gets a little tricky, because product costs, you need to figure out the total costs, right, to make these guitars. So you have to add in that supervisor salary because it's a cost associated with the product. We just calculate it a little differently, okay? It's considered what we call overhead. So direct costs, again, are going to be materials. Any materials we can directly trace to the guitar. It takes, 5 strings. I don't know how many. I'll just make that up, right? 10 strings, however many strings are on the guitar. We can calculate that. We can calculate the wood, the little knobs, we can figure out those materials. So big materials, like the main materials it takes to make a product, are a direct cost. They're a product cost, they're a direct product cost. Again, that production supervisor is an indirect cost. Other indirect costs, just to kind of give you an idea, would be any factory costs. Indirect product costs are going to be factory costs. We have to pay rent to have this factory, or we own the building, but we might pay depreciation on equipment. That's an indirect cost. The utilities to run the factory are all indirect costs. So we don't know how much electricity it takes to make one guitar, right? Not really. It might vary month to month too. So that's an indirect cost, okay? So again, you just look at the cost and it's like, can I directly figure out how much of that is traced to one production item? Then it's direct. Again, direct materials, direct labor. If I can't trace it, then it's an indirect cost. Okay. So when we're setting up and talking about these different costs, we have indirect and direct, and we also have product and period costs. Product costs are any costs associated with making the item. They can be direct or indirect, okay? So product costs there's 3 categories: direct materials, direct labor, and factory overhead, okay? Well, the great thing is these say, right, direct materials, direct labor. So those are your only 2 product costs that are direct costs. All your factory overhead costs are indirect costs. So we're going to look at monthly costs and then try to calculate it from there. We'll have different ways to apply those factory overhead costs. Bless you. Okay. So again, just to kind of, and I have that on here on your notes, manufacturing or product costs, direct materials, direct labor, and factory overhead. It's one of the biggest concepts of the whole class, honestly. Like, you'll have to know that the whole semester. So I'll keep like hammering it in, right? Direct materials, direct labor, and factory overhead. Those are always your product costs. Again, factory overhead is going to be like supervisor salaries, maintenance workers, whether they're maintaining the equipment or the building, equipment depreciation, factory rent, utilities, anything tied to the product though, okay? A product cost is tied to the product. So my big hint for you when you're looking at factory overhead, like, is it a product cost? Well, is it associated with the factory? If it has the word factory in it, that'll be clue number 1. But if you can associate it with the factory at all, then it's going to be a factory overhead, okay? So the cost of finished product includes direct materials, direct labor, and factory overhead. Those are going to be your costs that end up in your cost of goods sold, okay? So those are your product costs. And we talked about that. Talked about all of that. See, we're good there. So the only thing that gets a little tricky is we could have materials or labor that we consider indirect, and then therefore their factory overhead. So say we use some oil, on the guitars when we're putting them together to make sure the screws don't get too tight or whatnot. Well, it's probably pretty hard to track how much oil we're using on each guitar. It's not like something you would trace. So it's still a product cost, but it's an indirect materials. Indirect materials becomes a factory overhead product cost. Okay, so indirect materials or indirect labor. So anything, again, that we can't like determine how much oil we're using on the guitar or something like that, that's going to be an indirect material. Okay. So those are a lot of times, you know, and they said, I guess I gave the same example, right? It includes the cost of oils used to lubricate machinery, possibly. Again, indirect labor, we've already kind of talked about that. That would be like janitorial staff or maintenance staff and supervisory staff, okay? So those are indirect materials and indirect labor. Those are factory overhead. They're still product costs, but they're indirect product costs. So all, basically, when you hear factory overhead, that's all indirect product costs, okay? Let's see, we want to do that one. Well, we'll talk about the different. They just convert those two costs into prime costs and conversion costs. So the great thing about cost accounting or managerial accounting is they like to give you lots of different terms, right? Yay. Prime costs are direct costs, direct product costs, materials and labor. Your prime costs are your direct costs, so direct materials and direct labor. Conversion costs are the costs it takes to turn a raw material into a finished product. Makes sense, right? You're converting it from raw materials to finished product. So that conversion costs are labor and overhead. Okay. So again, they're just kind of calculating or reclassifying, giving it a different name. And we'll use conversion costs as we move along into other chapters. Okay, so we'll revisit that. But now, right now, I think I'm at the point where we'll do our first example in chapter 15. So I'm going to exit out of this. If you go into Canvas and log into Canvas, you should see a chapter 15 practice. So if you haven't already, go ahead and open that chapter 15 practice. And the first one's classifying indirect or direct costs. So we'll pause for a moment and do that one. Take a little break from talking, right? Okay, so this one just gives us a list of different costs associated with a product. This is for Procter & Gamble. They're making consumer products. So we just want to classify it as a direct materials, a direct labor, or a factory overhead. So these are all product costs. Direct materials, direct labor, and factory overhead, they're all product costs. But we want to classify them as direct materials, direct labor, or factory overhead. So part A says the plant manager salary for the plant. Is that direct materials, direct labor, or overhead? Overhead. Overhead. Very good. What about maintenance supplies?
Overhead.
Overhead. Good. And those will be materials, right? But they're indirect materials. So they become an overhead cost. I'm going to make that a little bigger. There we go. Salaries of process engineers. Overhead. Very good. When in doubt, no, I'm just kidding. Wages paid to packaging department employees.
Direct labor.
Very good. That's direct labor because they are actually packaging the material or the product itself. So they're touching the product. So it's direct labor. Scents and fragrances used in making soaps and detergents.
Direct material.
Direct materials. Very good. F, wages of production line employees.
Direct labor.
Direct labor. Good. G, depreciation on assembly line. Overhead. Very good. That is a factory overhead. H, packaging materials. Yeah, very good. Direct materials. I, resins for body wash products.
Materials.
Materials as well. Very good. And then lastly, depreciation on the manufacturing plant. Factory overhead. Very good. Those aren't too bad, right? Just kind of, again, getting it in your head. These are all product costs because we're going to talk about other costs here in a minute. But again, direct materials, direct labor, and factory overhead are all product costs. So all of these are examples of costs that can be traced directly or indirectly to the product. Okay. Any questions on classifying costs? Okay. Well, we can actually do the next example too. Whoop, whoop, right? It's always fun. Wake up, guys. No. So we're still classifying costs, and they're actually giving us all these different costs. But this is a manufacturing cost report for marching ants. What am I thinking, right? I'm curious. And so they tell us, materials used in production, including indirect materials. So that's kind of important, right? And then they tell us direct labor, including maintenance salaries. And then we have factory overhead. So they tell us our factory overhead, supervisor salaries, basically utilities, sales salaries, promotional expenses, insurance and property taxes on the plant and the corporate offices, depreciation on plant and equipment and corporate offices. Well, I guess I better talk about, hold on. I apologize. We do need to talk about the other cost category first. Haha, just kidding. Okay. We'll cover these couple of slides first and then we'll go back to it. I forgot. Oh yeah, I made a note and then it was wrong. So good times. Product costs are what we just talked about. Anything directly traced or indirectly traced to the product. Any cost that's assigned to the product. We also have what we call period costs. Okay. Period costs are selling and administrative expenses. They're not tied to the product itself directly or indirectly, really. So your period costs are mainly like selling expenses. So that's going to be like sales salaries, marketing expenses, advertising, things like that. And then administrative expenses are all of your people that work in the main office. So you have like your CEO, vice presidents, all of that. And then like all of the administrative costs. So rent on the main office building, depreciation on office equipment, anything that's tied to the office is going to be administrative costs. So obviously it's all tied, everything is tied to making the product, right? But we're still separating it out, factory versus office. So again, product costs, anything that happens in the factory. Period costs are sales, and then or really anything that happens that's tied to the office, the main office. So like think of headquarters or corporate, that sort of thing. Okay. So they broke it down here again. Product costs, we went over that, so we won't redo it. Period costs would be selling. So again, advertising, sales salaries, commissions, anything tied to the people actually selling the product. Administrative, office salaries, office supplies, depreciation. Again, that could be utilities and rent tied to the office itself. Okay, so period expenses are office expenses. So that's just showing you as far as the costs go. Product costs are going to be tied to inventory in the balance sheet. They will still go into cost of goods sold, which shows up on the income statement. Period costs are selling and administrative expenses, also on the income statement. And you kind of see that, in your merchandising versus manufacturing. That's just showing the calculation of gross profit. So from your gross profit is where you subtract out the selling and administrative costs. Okay. Okay, now we can go back to our example. There we go. Okay, so they give us all these different costs, and we want to put it into manufacturing costs. So manufacturing costs are just product costs. So again, what are my three main categories of product costs? And overhead. Good, yeah, very good. Direct materials, direct labor, and factory overhead. So we're going to look at the whole list of costs for the whole company, and we just want to grab the product costs, okay? So when we're doing, this is just a manufacturing cost report. So we're just gonna start with our direct materials, cost of direct materials used in production. Cost of direct materials used in production. Well, did I use $607,500 of direct materials? No. How many direct materials were used in production?
478,100.
That's labor, the 478.
You said direct labor, right?
Materials. But yeah, I think I heard it. 551,300. Yes. Yeah. So your direct materials cost is your total materials minus that indirect materials, right? Because indirect materials are factory overhead. So very good. Our cost of direct materials used in production are 551,300. 551,300. And then we list direct labor. Direct labor. And you guys, and Alec got that one. We just have to subtract out the maintenance salaries because that's indirect labor. So 562,500 minus the 84,400 to get just the direct labor portion. And that is 478,100. Okay. So you guys got that. And then we just want to look at all of our overhead and figure out what is product or manufacturing costs, okay? Well, we know we have some indirect materials and indirect labor, right? Because we just saw that. So let's list those first. So we have, I think they have us list maintenance salaries first for whatever reason. So maintenance salaries is an indirect product cost, and that was the 84,400 maintenance salaries. 84,400. And then we know we had indirect materials. Indirect materials was 56,200. 56,200. And then we just need to look at what they list as factory overhead and determine if it's actual product factory overhead or is it a selling and administrative expense. So supervisor salaries at the plant. Plant's another word for factory. So is that in factory overhead? Yes, very good. Anytime it says plant or factory, it's a factory overhead. Pretty simple, right? Most of the time. So supervisor salaries at the plant are definitely an overhead. 517,500. 517,500. What about heat, light, and power plant? It's overhead. Good. Yeah, it's utilities at the factory. So heat, light, and power at the plant is a product or manufacturing cost. And that is what? 140,650. 140,650. Sales salaries. Is that a factory overhead? No. That's a selling expense, right? It even, if it's related to the sale of the product, sales salaries are a selling expense, so they do not belong on our manufacturing costs. How about promotional expenses?
No.
No, that's also a selling expense, right? It's some type of like advertising or some type of incentive. Insurance and property taxes plant.
Yes.
Yes, that's an overhead. It's tied to the plant. So that is 151,900. How about insurance and taxes at the corporate offices?
No.
No, that's an administrative expense. So that's a period expense. Depreciation, plants, and equipment.
Yes.
Yes, that's a factory expense. Very good. And you can kind of tell, well, that's our last one, right? And we know that too because depreciation on corporate offices is administrative, okay? So that's just putting our costs into a manufacturing cost report. Again, these reports are for, the manufacturing department specifically, production. So it's an internal report. We're just looking at our total costs for the month, or for the quarter, sorry, for the quarter. So what's my total factory overhead? Anyone added that up? Very good. 1,074,400. 1,074,400. And then what's my total manufacturing cost? Very good. 2,103,800. So that's direct materials, direct labor, and all of my factory overhead. So when we calculate these manufacturing costs, that's one portion of our income statement. Okay. Total manufacturing costs, that's one portion. Okay. Any questions on that? So really, so far, we're just learning how to classify costs, right? Okay.